Light Sweet Crude daily forecast, July 23rd, FXEmpire.com. As you can see, the light sweet crude market on Friday did have a negative day, but it did form a hammer, just sitting above the 90 level. Now, while the hammer itself isn't impressive, what is impressive is the fact that it is showing 90 to be supportive. 90 was fairly resistive, and this is a tenet of technical analysis. What was once resistance becomes support, and vice versa. Since this is such a common law of technical analysis, the beauty of it is that it will more than likely become a self-fulfilling prophecy. And that's fine. We like that. That makes trading easy. It should be noted, however, that the 95 level above is actually the 50% retrace on the longer term charts. The weekly charts look something like this, with this being 80 and this being 110, and 95 is right in the middle. It should also be noted that this latest bounce has been pretty sharp, but for that matter, the fall was too. So these volatile conditions are going to be very difficult to maintain. So that does give us a little bit of pause. However, we still think that $100 probably going to be targeted, and as such, a break above the daily candle for the Friday session could be bought. You definitely have a safety point, about $89 or so. If it gets down there, then obviously the trade hasn't worked. So you have nice references, and that's always a big deal. We feel that headline risks are still out there to throw this in both ways, really. But with the global economic situation slowing down, we view this more as a trade and less of an investment. So that's why we think that a pop up to 100 probably should be taken at profit at that point in time. A spike up to 110 or so is probably a little bit of a stretch. We may get up there, but truthfully, we feel at this point in time that trading at the outer extremes seems to be the way to go, unless, of course, we get some type of breakdown and meltdown through the bottom. Which, with the slowing economic conditions, it truly makes more sense for this market to go down over time than to gain.